Hey everyone, welcome back to Corporate Decoder. Today we are diving into a filing from Nuvve Holding Corp, a company that's probably wishing it could hold on to some more equity right now. Let's see what's going on with this electric vehicle charging company and why they've caught the attention of the Nasdaq stock exchange. This is a Form 8K, which is basically an urgent update that companies have to file with the Securities and Exchange Commission, or the SEC, when big unexpected things happen. Think of it as a corporate breaking news alert. The most recent event happened on April 7, 2025. That's the day they got a letter, not a love letter, a warning letter. This report is from Nuvve Holding Corp, a company focused on electric vehicle charging solutions. They're in the business of helping electric vehicles connect to the grid. This section is all about Nasdaq, the stock exchange, telling Nuvve they might get kicked off the exchange. It's like a school principal saying, shape up or ship out. On April 7, 2025, Nuvve got a notice from Nasdaq saying they don't meet the requirements to stay listed on the Nasdaq capital market. Specifically, it's because of something called the stockholders' equity rule. The stockholders' equity rule basically means a company needs to have a certain amount of assets minus liabilities or net worth to prove they're financially stable enough to be on the exchange. It's like having a minimum bank balance to show you can handle your finances. In their annual report for the year ending December 31, 2024, Nuvve reported a stockholders' equity deficit, meaning they're in the negative. Instead of having assets exceeding their liabilities, they owe more than they own. That deficit number is about negative $1.3 million in stockholders' equity. For now, Nuvve's stock will keep trading on Nasdaq under the ticker symbol NVVE. They haven't been kicked off yet, but they're in the danger zone. Nuvve has about 45 days to give Nasdaq a plan to fix this. If Nasdaq accepts their plan, Nuvve could get up to 180 days to prove they can get their finances back on track, meaning they have till October 4, 2025. If Nasdaq doesn't like the plan, Nuvve can appeal. Nuvve says they will submit a plan and try to get back in good standing with Nasdaq, which is what you would expect them to say. Now let's look at the exhibits attached to the report. The exhibit listed is just a technical file related to how the report is filed, so we won't spend time on it. Looking at the situation, Nuvve has some serious challenges to overcome. The fact that they have a stockholders' equity deficit shows they are in a tough financial spot. This isn't just a minor accounting issue. It means the company's liabilities outweigh its assets by a significant amount. Submitting a plan to Nasdaq is a step in the right direction, but the plan itself needs to be solid and realistic. Nuvve needs to convince Nasdaq that they can turn things around, which likely involves improving their profitability and reducing their debt. If they fail to regain compliance with Nasdaq's rules, their stock could be delisted, which would make it harder for them to raise capital and could negatively impact their stock price. It's a high-stakes situation for the company and its investors. The situation with Nuvve is a reminder that investing in emerging technologies like EV charging can be risky. While the sector has a lot of promise, not every company will succeed, and financial stability is key. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings.